All right, friends, YouTube, it is recap time. So we got our target. So we called the market bounce for this week on Monday. Why did we do that, right? Sunday to Monday coming in right here. We had a couple different interesting reasons. Well, we'll go over some of them right now. So on the move up that we had right here, we talked a ton about having a metric ton of volume right here in some of the heaviest traded zones, right? So if I go to the weekly, clean this up to a tab where we don't got a bunch of mess, we will see that I need to go back further. There we go. So it's easier. Alrighty. So when we came into this little area here, this was a massive bounce zone. Now I'll start here at the weekly because we have the 100 EMA, and that's again one of my most favorite moving averages. So a 100 EMA bounce usually very nice. Well, whether it be temporary or not, doesn't matter. It will come up as a bounce point and be pretty kosher. Let me grab my draw tool here quick. Oh, it's loading, thinking. There we go. All right. So 100 EMA is green right here. And as we look to our left, this was a mega zone for lots of reasons for bounce point. Now, for one, we have some of the highest traded volume right here near 413. And change 100 EMA on the weekly level. Then if you look to the left, right, we have some pretty solid levels here that are going to be coming into play. So some of these levels include this guy right here. Now, this is one of the biggest over-unders I had for a target, 417 and some change. And we get that by associating a price level with a bunch of monster interactions, 3 weeks worth of rejection, gap on the weekly with trend change. That's a massive one. 3 different weeks holding support right here, 417 before it popped to drop. And then another really big continuation trend, 2 weeks consolidation at the top, 2 weeks consolidation at the bottom. Both hit support and roll to all-time highs. Now, same thing, that was a monster resistance when we broke out to this run right here, where we came up and tagged, and then finally broke out. So as we kind of come back down to that zone, this is a very high traded zone. As you can see, the over-unders are massive. So we had but way more than that as well. So let's scoot down to the daily. And this is where some of our time profile goes on. And highest amount of traded volume comes in right here. This is our POC. So that was also a huge bottom pick that we covered, right? And then if you paid attention to the VIX, I'll get back to that as well. We had gaps associated on the VIX that needed to be filled that we talked about a while back, right? So these were $19.08. This was the gap right here. So there is a gap here, and that zone had never filled on the VIX. And these gaps create magnets, right? So after price action on VIX popped back up and slammed us down for a few more days, we had came into some absolute monstrous amount of resistance. This is the deviation +2 on the weekly and the daily, these giant teal dash marks, or green rather. Those are pretty massive. So once we started coming under there and started leaving it, we were going to start magneting this gap down here for a fill. And then I said it could go down to 1870 on the VIX, so on and so forth. And all of that happened and predicted very well. The last but not least part of our bounce long is the gap. Now we have a couple of these now. We have a futures gap on the low side here, but we also had one on the top side, right? So this futures gap left from last week, that was our affordable target. So again, once we gapped up here Monday, pushed, all we had to do is hold. This is the teal line right here. This is the 100, it's green, I guess, 100 EMA weekly. So that's what it looks like intraday. So you see it hit, pop, consolidate, push, come back down, test strength, boom, 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 and then filled this gap on our target, and that's what we called for today. So those were all the little big metrics from last video to kind of catch you guys up if you didn't see it. To get into the intraday, let's go over what we saw. All dip buys all day, so she was looking good. Let's get back to the SPY. All right, so we called, because of anchors and a bunch of other stuff, half candle retrace and right around 414.70s. That was the huge volume profile I had on another chart as well. So 414.70s which is half candle retrace, right, which is this orange dash line as well. So half the candle of yesterday. So this is half candle retrace. That's a 50%er. And that came in with a very strong volume profile at 414.70s and change. So that was the mass amount of support. We had obviously some data here that came out, knocked us back down, which was definitely good. We needed that. We were way too hot to be continuing the push up to our target. Needed a cool down. So we wanted to see a force up, drop, and then buy all dips, and then move to the gap on the futures, and so on and so forth, and potentially back to the point of control that we had here. So 417.70s and 414.70s was our main levels of support and resistance pending on volume. So I picked up a very large win day here, a couple across all the counts, so almost 6 on the day. So let's talk a little bit about what you see kind of cruising just briefly, because this stuff is, this one's a pretty easy one. We can call this bounce since Monday, and it was going to bounce. So the algorithm, which we pay a lot of attention to, give us a body right here. And that was an over-under point. And these have been popping up every day for hours. You want to pay attention to the body of those ghost wick candles, okay? So as we see, it kind of breaks through and starts to consolidate, and then just kind of holds that algo, and then rushes back up into the breakout. Now, we had a couple interesting signs where we shied the pre-market low and shied the pre-market high. So we had price action that could potentially be stuck kind of in between until Powell or another catalyst, but we were still banking on the gap fill for today. That was our pre-market plan to get up there. So holding the algo after hours, holding a really good higher low, higher high set. So once that higher high was set, all you had to do was wait for the sell. Very nice support found. And then 50%, I don't know what I'm drawing with here, a different one, recovery on pretty much all metrics. So once we got over on the MACD here, it started pushing up. That was the consolidation zone of support. Same with the RSI, push back down, consolidation, broke loose there. And we spent really, really clean, long day. I mean, we did hit some jolts in the market there back and forth, but those things were easily capsized. So we purchased into all higher lows, into the algo, into 200 SMA moving volume. A lot of longer standing time frames had rolling support as well. So when we look at stuff like the 30-30, we were talking huge extensions starting the week. Way down here, here's your half deviations here at -1 deviation, 0, -2. So price action was at half deviation in between -1 and -2 on this bounce right here coming to that Friday. So as I said, Monday is going to be that market bounce. We just had exponential support rolling back up, and then we used the gaps on the ES and VIX as targetable offenses, right? So until that gap was open on or closed on ES on the top, we weren't going to fall back down. We're going to magnet to that gap, fill that ES gap, and then so on and so forth. But now remember, we just went over another gap on that ES. We have a gap and go. So again, this is a temporary rally, in my opinion, until we come back down here to this 41.39. And AMD earnings knocked a little bit here, but we're going to see what the end of the year rush looks like here and continuing on. But remember that ES gap. Now, for as far as last week is concerned, you're going to take the Fibonacci, right? This is the last point of interest that you should have on your chart. Last week's big engulfing red. And since we opened up above the close, okay, stretched out here. We opened up above the close. You fib out the body of last week's candle and use those price levels for walk-ups, okay? So as you see this teal level right here, this is the body of last week. And this is where we get a lot of our support roll. Now, the bottom is right here. We opened in a gap right here and then moved on. So once we hit 2360 fib, pushed up, ding, right into 3820. Needs the reset, comes back down to the earlier 2360, ding, 50%. Okay, comes back down, relaxes, all the way back down to moving average support, gets a reset. Ding, gets a little bit of a double top at the 50. 50 is usually your day trade long scalp target. If you open up inside, right, above this level, the close right here of the weekly, you usually have a chance to go to the golden pocket. We call the golden pocket in between the 50 and the 3820. So this whole thing is the golden pocket, and that's the area you want to see. Now, we need a little bit of a catalyst, and it's a little shaky today. A couple of these drowned outs here were kind of dangerous, but we did end up making up to this gap and to the final target past the 50, right? So here's that 50 rejection, 50, came back in for all higher lows, right? Broke through the 50 and ding to the next fib, 61.8. And gap fill target. Now, those fibs, especially when you have it engulfing weekly, are very important levels for your predictive. Okay, so find out where your support is, right? Find those really good risk managed trades on those Fibonacci levels, and then magnet to the next Fibonacci level intraday. So use a longer standing weekly Fibonacci to help those intraday price level trades, right? So that's all we got for the recap. The bounce is continuing, and we are still looking for upside. Now, could get a little chill in AMD earnings, and it's all up to Powell. We'll see what that does, but I think the rally continues. So we're going to get a bigger bounce off this, and wherever we head to, we'll see. But I think there's going to be some consolidation finally after this next rally, and it's going to do some thinking into 2024, and then poise for that large potential rally. So we'll catch you guys on the next. Stay tuned.